All right, welcome aboard, guys. And this is our second session, as promised, out of 6. Today we're going to talk about using the crowd to your advantage. I think I jinxed myself in our last session. I did, in fact, that last trade that I had there on silver here ended up being a loser. I just closed it out earlier today. It didn't quite get to the stop loss, but it was nearly there, so I closed it out. So, of the trades that we've had since we started running the worm trades and lighthouse trades in the account, we've had one loser basically, and the rest have all been wins. And if you are interested in joining us in the trading room for the worm and the lighthouse, you can go to the link that I'll put here for you. You can go right here. That is our page right there. Okay? Boom. All right. So how do we use the crowd for... And by the way, I always use the crowd when I establish which positions I'm going to take. And the reason I do this is because our traders, historically, we know that our traders will go against major trends. All right? Now, this is an empirical question, and in other words, it's testable, right? And so if you look at what Forex traders do, retail Forex traders, and these are the Forex traders that we have to do better than. So we make money from Forex traders who make mistakes, okay? So the broker's going to make their money, and what we have to do is we have to actually find a way to be on the other side of the losing traders, right? So I'm trying to bring up a study for you, actually. Here it is. Okay, 43 million Forex trades. There it is. I typed in 53 million Forex trades. Okay, so this is a study here from, I used to write for Yahoo Finance, actually. They asked me to do some trading stuff for them years and years ago, like 20 years ago, 15 years ago. So this was a study from dailyfx.com. So this is actually a reprint of that study from dailyfx.com. And they looked at 43 million. Actually, DailyFX, one of my students worked for DailyFX too. He's a very good trader from Canada, and he's the one that came up with the modified big shadow strategy. So DailyFX took 43 million Forex trades, and they were looking at an interesting. What they found was that most of these traders actually had a really good win rate. As you can see here, their win rate is generally above 50%. I think even, I don't know, the Aussie yen might be right on 50, or maybe it's 51, something like that. But as you can see across the board, the blue trades, the winning trades outnumber, or the percentage is higher than the red trades. Okay. The issue, though, is that their losses are much bigger than their winners. Okay. So their reward risk ratio is too far upside down. And so that's the real issue. Like, as you can see, 59% win rate on the pound, but the the winners are 43 pips, and the losers on average were 83 pips. Okay, so and this goes back to one of my. I knew a guy, okay, who was he started a fund. You know all those prop firms that are out there today? He started a fund where people would try and qualify, traders would try and qualify for his fund, and he set up this set them up on a demo account. He said, "Look, if you can trade profitably over the next month, we'll move you onto a live account. We'll share and we'll share the profits with you." And so what he was doing actually was he was inviting these traders in, and they thought they were trading demo. They were actually trading a live account. So all of their accounts were hooked up to a live account, and they reversed the trades. So whenever they took a buy on the euro, it was initiated it, in the system initiated as a sell. And I said to him, I said, that's crazy. I said, so you're just letting any random person come in and trade your fund? He goes, yeah. He goes, they always cut their winners short and let their losers run. And I said, I couldn't work with this guy because he was so dishonest. But I did think that was pretty funny. And it's exactly what this data shows. Actually, this data came from FXCM. I don't know if you know, DailyFX used to be with FXCM when this study came out. And then DailyFX was bought by IG Markets. So it's an old website. But the point is that retail Forex traders, the traders that you and I have to do better than to get our profits, they, generally speaking, make this very simple mistake. They have big losers, small winners, and they try to win all the time. Now, beyond that, if you look at the open position ratios, which you might be asking, what are the open position ratios? Here, let me look for, here, let me do this for you. Can you hear me okay, guys? Does it sound all right? Yeah, I think I have the right microphone on. I just want to make sure that the sound is okay. Okay, cool. Should be loud and clear, yeah? Excelente. Okay, cool. So the story with the So the story is that IG Markets bought this website, and if I go to IG Markets and I look up USD CAD like this, what you'll see is this number here. So I'm looking up IG Markets USD CAD, all right? And it's going to give me the data from the USD CAD pair, which is updated every 10 minutes. And you can see how it says 75% of the market is short, 75% of the market is short. So this is different from sentiment. This is not how do you feel about the USD CAD. This is what are the traders doing with the USD CAD. That's what this is. And so why would I pay attention to this? The reason I would pay attention to this is that typically when there are a lot of retail traders, and IG Markets has a big chunk of the retail market, when they are all piled in on one side, like right now they're all going long the Aussie, that means the Aussie is probably falling. Let's look. Let's test that idea. Is the Aussie going down? Yep. Here's the 6-hour Aussie chart. Yep. What does this look like to you? I see lower highs and lower lows. We're literally following a downward channel on the Aussie. And yet, it's down here. It hasn't taken out this low yet, but boy, it looks like it's about to. And yet, when we look at our open position ratios here, why would everyone be long? Well, I'll tell you why. The reason why, and actually we could put this in for the Aussie too. Let's do that. Let's do Aussie. All you do, there we go. 85% of client accounts are long. So that means that we want to be in the 15% that are short. We want to be in the minority that are selling this downward trend. And so what's happening, the reason why when you look at the retail Forex traders data here and why all of their winners are so small, as we saw right here, the winners are the blue. So what are we looking at? Aussie? Okay, here's your Aussie right here. So the average winning trade on the Aussie is about 39 pips, and the average loss on the Aussie is about, I don't know, 47 pips. So 47 pip losers and 39 pip winners, something like that, right? And then what's the win rate on the Aussie? Let's see. The Aussie win rate is right here. It looks like the win rate's about, I don't know, 53%, somewhere around there in terms of this study, right? So what's happening is the market's going down, and the retail traders are looking at this and going, that's the bottom. That's it. it's going to reverse from here. And then when they're wrong, it comes down here. They say, okay, that's the bottom. All right, that's it. It's going to reverse from here. And then, then it gets down here, and they say, okay, nope, that's definitely the bottom, right? And so they're all thinking that, they've caught the bottom. Or no, that's the bottom. It's going to make a double bottom now. It's going to go up, right? And so the only opportunity they have to cash out or make any sort of profit or reduce their losers is when the market makes a very, very weak move counter trend, which is what we have right now. This right here, this weak move on the Aussie dollar is a counter trend move against the downward trend. This, my friends, this is a downward trend, right? I don't mean to be like pedantic, but what I'm pointing out is that if you can keep an eye on what our friends are doing, what our fellow competitors are doing in the retail world, you can do quite well, because I guarantee you they don't know what they don't know. They don't, and I did the same thing. I remember when the euro came out, okay, in 2000, 2001, and it was, I don't even know if you could, I don't even think I can pull up a chart that goes back that far, but the euro actually fell. If you go back, I think it fell to like 86 cents or something. It was just going down, right? They had a synthetic euro as well, so they had these charts that sort of gave you what the euro was worth, even though it wasn't really traded back then. So it was a bit weird to start currency trading. I shifted over from share trading to currency trading back then when the euro kind of came out. So it was kind of weird. But what was interesting was that all we knew was that the euro was going down, right? And so when the euro got to $1, it was big news back in 2001, 2002, something like that. I think it was 2002. And I said, there's no way. There's no way it's going to stay above $1. It's going to go right back down. And here we are 20 years later, or 23 years later, whatever it is. It's like it still hasn't broken $1, right? I think it might have tested it once or something, came close. But like, it's so crazy. I don't even know how far back it'll go. Oh, it does go back. Okay, let's have a look. I want to see. I'll show you. So, yeah. So what happened was it came out back here, right? And it was in phases. So it would come out, sort of digitally before it came out, with the cash and all that. But I'll show you where's 2002? Yeah, right here. Yeah, this is it. So when it came out, it only went down, and it bottomed out at 82 cents. I was wrong. I thought it was 86. So it bottomed out down here, right? And we just kept selling it, and then when it got up here to $1, I was like, "There's no way. There's no way. There's no way. It's not gonna. They're gonna send it right back down." Well, I'm still waiting. So that was my instinct when I first started trading. My instinct was that this was the top of the euro. Okay? So I'm no different than any of these other traders that you look at on the open position ratios, or that you look in this study. It says from a major FX broker. It was FXCM. I can tell you that. But anyway, the point is, that's why you want to pay attention to what the crowd is doing. Now, you can look this up on your own. Like, you can go to IG. I like IG because they have many, many markets, as you can see here, and it's updated every 10 minutes. And they have a pretty good chunk of the retail market. So you're going to see different numbers if you go to different sources. But what you want to do is you want to go to a source that has a lot of retail traders. You don't want professionals. You don't want funds. You don't want to mess with the good guys. You want the losers, right? You want the losers, because really there is no better trend indicator than what the crowd is doing. And I'm talking about the crowd that likes to pick the bottoms and the tops, which is what the retail crowd. I mean, think back to when you first started trading. What were you doing? You're probably doing exactly what I was doing. I was trying to pick the top of the euro and say, this is it. That's it. That's the end of it. It's going to go down from here. And guess what? Here we are. Maybe we will finally break it. Maybe we will. I mean, we had a brief move there in 2022, right? But maybe we will finally get below $1 with the euro and stay down there. I don't know. These are monthly candles, by the way. Monthly, yeah. So how do we do this? I'll explain. And you can actually, there's a rhythm to it. You can actually see exactly what the crowd is doing over time. So now my programmer created this page so it pulls all the data from IG, but you can just go to IG. If you're not in the private forum at nakedforexnow.com, then you won't be able to get this page, but that's okay. You don't need it. You can go to the broker of your choice, Awanda, Saxo Bank, Dukascopy, IG, wherever you like to get your data from. I would discourage you from going to a place like MyFXBook or something where there's like some somewhat savvy traders. You really want the retail traders that are losing. You don't want to go to a group as a resource where some of them are actually pretty good. So that's the key. And the problem with like Awanda and those other ones is they only show you like 6 or 8 pairs or something like that. So IG has a lot of pairs. So I really like it. And so what I do is my programmer, I asked him to color code this. So when it's over 70% long, you will see it go red like the Aussie CAD. When it's 64 to 69% long, like the pound Singapore here, it will go orange. So as soon as it goes orange, it's like, okay, we're a little bit out of whack here. And by the time you go red, it's way out of whack. Okay? So it should be a trend. Now, I will admit that about 1 out of 11 times you will notice that these numbers are out of whack, and yet the chart's going the other way. So in other words, you see the pound Aussie, everyone's short the pound Aussie, and the pound Aussie is going lower. Actually, I'll tell you an example. We recently had that with the Swissy. The Swissy was red for weeks, and yet it was marching higher and higher. Let me get rid of this monthly chart. I'll show you on the 6-hour Swissy. See how the Swissy's doing this? Well, from here to here, I probably shouldn't draw a line. I'll draw a box. It was basically a red box. It was bearish numbers, and yet the Swissy made this move like this. Okay, so during this move here, the Swissy was going up, and yet we had a red box. So it was like the Aussie is now. It was like 73% long or whatever. So the crowd was actually right, but that is rare. That is rare. Most of the time, the crowd is wrong, and they will highlight a trending market because they're all going the wrong way. All right. Now, if you really want to blow your mind, what you should look at is an open position ratio versus price chart. So what you're looking at is the price, the moves in the market versus the open position ratio. And it's so good. Oh, here's an example. Here, I'll show you this one. So let me see if this looks like this is a study. Well, this is great. I didn't even know that someone did a study on this. Okay. I wish I could zoom in for you. Let me zoom in for you, okay? All right. So this is the USD Swissy over a year. So let me show you how to interpret this. This is from Awanda, I know from the colors and everything. So the long positions here, you can see when there's over 50% of the traders are long, then it's this blue right here. This blue peak is telling you how many traders are buying the USD against the Swissy, and these orange peaks here are saying how many traders are selling the USD against the Swissy. So when it gets down here, it's over 50% of the traders are selling. Now this black line is price. You tell me what price is doing when these guys are selling. As more and more traders are selling, the Swissy is actually going higher and higher and making higher highs. And then look at what happens here. The Swissy peaks right here in price. And then look, we've got like 60% of the 65% of the traders are going long. What's happening to the Swissy? It's falling, 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 going lower and lower. And as it goes lower, we have more and more of our traders are going long. Why? Because they're trying to pick the bottom. So it's actually a, people will tell me, they'll actually say, well, why would you go against the market? You're not going against the market. The market is going down on the Aussie, right? So the market on the Aussie is down.
There's no doubt it's going down. It's been going down since September, right? So the market on the Aussie is going down. What's happening is there is a small group of traders. Remember, retail traders make up what, 2 or 3% of the entire Forex market? So 2 to 3% of the traders as a group are picking the wrong direction. They think that the Aussie's bottomed out. That's why so many of them right now have decided to buy. How many? 85%. Let's refresh this because I've been yabbering on for more than 10 minutes. So we'll have a good look at where we're at now. It usually moves around slightly, especially now because, you know, with the European session, it's fairly active. Let's see. Nope, still 85%. There are some that are higher, New Zealand Swiss, but that's not a good trending pair, really. So, yeah. So this is what's happening. So how do I use it? I'll show you. Let's say that I have a. Let's go to Euro Pound actually, because Euro Pound has some bearish numbers too, I believe. So, oh, this is great. This will be a great example. Okay, so I looked at my Euro Pound numbers, and I see that they're bearish. 72% of the market's long, so I want to be in the 28% that are short. And then I hop over to my chart and say, okay, what's the Euro Pound doing? Well, I've identified that there's a really important spot here on the chart, and that we are approaching that super important spot, which I'm calling 83. So the 83 level is a support resistance level that's come up repeatedly in the past, at least since September. So we had September here, October. We had a quick dip below that came right back up, and then it's been held ever since. It fell, it pinched it fell again, and now we're right back up here. So the question is, when we get up here, what should I be looking for? Because I know this is an important spot on the chart, but what is the market going to do? Well, if I look at my open position ratios, I should be bearish, right? Now it's not enough to just have the number here. I need to look at the chart and say, well, has the market been going down? Yes, it has. It has been going down. It's below a critical level of resistance, and I believe what will happen here is I will get a reversal signal. And in fact, that would be my number one base case, would be a reversal signal. So what might that look like? Well, if we're looking at a higher time frame, like a weekly, maybe it turns out to be a kangaroo tail. Okay, that could be the case. Let me actually change this so it's not an array. Okay. So I might see a kangaroo tail here like this, and I could sell off of that. But if I'm looking at the 6-hour chart as we are right now, I might end up with something like a double top. Most of the time, if I'm going to see a reversal here, it's going to be a double top. It's quite rare that you would get a V top or a V bottom. They do happen, and certainly on a higher time frame they'd happen. You can see there was one right here. But if I drill down into the 1 hour, I bet you it's a double bottom. Let's see. More like a triple bottom, really. Like one low, lowest low, higher low. Like that's kind of almost like a reverse head and shoulders, but not a clear double bottom. So I was wrong on that. So on this, we go, okay, it's going to probably hit and then maybe hit again, or maybe just kind of have like a moolah top or something and fall. So I would definitely be looking for a sell here. Another possibility would be that it actually has a breakthrough here. This is a lot of momentum behind this 6-hour candle here. So maybe it gets through. Maybe it gets through. But again, because I have my bearish numbers, let's just assume they're still bearish and we get this breakthrough. Guess what I'll be looking for? I'll be looking for a failure here. In other words, like what we had over here. The market is often remarkably symmetric, and the fact that we had this over here, that means that there's maybe somewhere down the line we'll have a very similar thing here. So maybe we'll have a breakthrough just briefly and then it collapses. And in that case, the trade is going to be here on the retouch. So it'll do a pop like that. You'll catch a lot of people out because there's going to be a ton of orders above this swing high, an absolute metric ton. Why? Because if I'm think about it, if I'm a breakout trader, if we get above these highs, I want to go long. If I'm a trend following trader and I'm using a breakout entry, if I'll put a bunch of buy stops here. If I sold over here, anywhere over here, it's likely that my stop loss is right here. So if I sold into this downward move and I'm still holding it, my stop loss is here, right? So there's a bunch of buy orders here. So there's a bunch of reasons why the market may want to move here and clear out all of those orders. It's like a magnet. And if that's the case, it may fall right back down because, why? Because I know that all of my rookie traders are going long, so they're probably going to get caught here like they normally do. Although they win on the retracements. So remember we were talking about the Aussie? Where are these traders taking their profits? They're taking them right now, believe it or not, on the Aussie. So this move right here, this is where they butter their bread. This right here. This is the move that the traders are taking right now. This move right here is where they get all their profit. Not here in the trendy move. They're only going to get it here in the counter trend move, right? Is that making sense? So this is really important they understand. So, all right, so let's talk about what, okay, that's great, but what do I do? Well, my preference is to use this as a tool in identifying the markets that I may want to look at. You can use the information that the markets are not out of whack and trade that as well. Let's go to the Aussie Kiwi. Okay, if the Aussie Kiwi is 51%, then I would just be looking for the markets to bounce off support resistance. I wouldn't be looking for any trending moves or any breakouts. In other words, on the Aussie Kiwi, I would be on alert for a double top here. I'm not expecting the Aussie Kiwi to rip through this and go all the way up here. Instead, I'm actually expecting it to maybe top out right about where it is now and then fall back down and go through this this low right here. So this would be like a double top, like an M top or a moolah top. That's what I would be looking for, because I don't see any trendy numbers on this. Now this is not a trendy pair anyway, but that's what I would be looking for. Okay? So when I approach support resistance, my numbers are going to give me a hint at whether or not the market will break through it or bounce off of it. So like in the case of the Euro Pound, I have bearish numbers and we're going up. Well, then I would expect this bearish move to end soon, especially when we're in such a close quarters to the really critical level. I mean, I would go so far as to say that if I'm above this level, I would be bullish this pair, and if I'm below this, I would be bearish. So the fact that we're coming right up against it is excellent. This is a great spot for a trade. And if I have neutral numbers where I have around a 50% mark, like the New Zealand dollar or the New Zealand CAD or the Aussie Kiwi, I would just expect market to bounce off trend lines, bounce off horizontal support resistance. I wouldn't necessarily expect the market to rip higher or lower or break through any barriers. It's only when we see really strong numbers that we would expect it to break through any barriers. Is this making sense? You guys, can you guys, yeah, any questions? Emma says, I was looking the pound CAD. Okay. Okay, there's a question here. Oh, let's have a look. I'm going to go to the pound CAD real quick. All right, so okay, so this is the pound CAD, and are the numbers still bullish? They are. So I would only be looking for long trades here. Right. So yeah. Yeah, you'd need some really big candles, two big candles on the edge, right? Yeah, you need two big candles on the edge. So we don't have that yet. You want the market to quiet down and then give two big candles. And we don't have that. We have one big candle here, but again, I definitely would not fight the open position ratios. So in other words, I'm looking at this move right here on the pound CAD using what we just talked about. I'm looking at this move as a bullish flag. So this is a bullish retracement, and eventually we're going to see the market pop up. Just like you did sort of in this mini version of this here, we had the market went up, and then you had a bullish flag, and then the market broke higher like this, and then you had another bullish flag here and so forth, right? Or at least consolidation. So those are the two things you'll see in a trend. You'll see consolidation, or you'll see the flags. They're the easiest to spot. Right there is consolidation before the break. Right there is consolidation before the break. And right here, you have one more, consolidation. So you'll get sideways consolidation, or you get the bullish flag or bearish flag. And so that's what we have here. So to me, this is just a downward retracement move, and it's eventually going to pop higher. So I would definitely not, I wouldn't want to sell that. On the Bitcoins, it's more of a sideways chop. So yeah, what's going on here is we've got a box, low, low, high. I don't see a second touch here, so maybe we'll define this box with another touch at 104 or something. There's your standard squeeze play there before the pop. So yeah, I would be looking for the move back up to that 104 area and see if we fail there once again and define this box. But yeah, we wicked into it down there. Boy, there was a lot of buying down there, wasn't there? A lot. I mean, the floor is established at, what is this? 90, 91. So the floor is at 91 now, right? For sure. Okay, any other questions? So I want to just make sure we cover all of what we talked about. So why do traders lose? Why do most traders lose? Because they try to pick the end of a trend. So that they're trying to catch a falling knife, as I say. And you can see that from the 53 million Forex trade study. The next thing is, how can you use losing traders to find the best trades? Well, if we want to use the push of the market, if we want to find the trending markets, what we need to do is look at what are the retail traders doing, because they are by far the best trend indicator. You can certainly use moving averages, the ADX, the Bollinger Bands, the force index, or what momentum, or whatever you want. But the open position ratios versus price, for my dollar, that's the best way to see where the market is headed. And then finally, which mistakes do you need to avoid to find consistency? If you want to be a consistent trader, one of the easiest ways to do this is to just make sure that your wins are bigger than your losses. You don't have to necessarily win a lot. Like, we know that you can. Okay, well, let me ask you: if you win, a 2-to-1, okay? So your winners are $200, your losers are $100. Or your winners are $2,000, your losers are $1,000. If you're 2-to-1, what does your win rate have to be in order for you to be a profitable trader? With a 2-to-1 win rate. 2-to-1 reward to risk ratio, sorry. Yeah, you only have to win 34% of the time. If you're winning 34% of the time with a 2-to-1 win rate, then you're profitable. If you're anything above that, so if you're trading the worm system, you know, like I've showed you in the worm trades that we've had, we've had one losing trade in the last couple months, right? They're all winners. And so what's happening is, that's not gonna it's not gonna be sustained that way. It's gonna come closer back down to maybe a 60 or 65% win rate, something like that. But that's more than enough. That's 30% more win rate than I need to be profitable. So there's a big fat edge there. And that's really what you need in your trading, is you need to understand that if I want to go with the flow, if I want to use the trend to my advantage and get the push of the trend, I want that wind in my sail, I can just look at the retail traders to see where the trends are. It is the easiest way. Now, sometimes you're going to see that, it looks like, it should be going down, like the CAD Swiss is a great example. So the CAD Swiss says 64% long, so it should be going down. Well, in actuality, the CAD Swiss has been chopping around. Where is my CAD Swiss? It's right here. This is a 6-hour chart. It's actually just been chopping around. It hasn't really gone anywhere. And it's been bearish for weeks, okay? It actually even went up for a while and then went down. But we're basically stuck in this massive range. This would be, like if you were using stochastics or RSI, like overbought, oversold indicators in your trading, you would love trading this chart right here. This is like the overbought, oversold indicator trader's dream. Right? The swing trader's dream. The MACD trader's dream. They love this stuff. It's perfect. This over here, not so much. Over here, no, they don't like that so much. But this right here, oh yeah. So, yeah. So if you want to be consistent, one way to do that is just to put the trend at your back, and to see the trend, all you have to do is pay attention to what the retail traders are doing. So it's pretty good stuff. Any other questions? Well, so what would I do to find a trade? What I would do is I would look, first of all, when I look at a chart, I'll know like immediately if it looks good. Like the Euro Pound looked really good. As soon as I look at the chart, it's like, wow, it's going right to a good level. If I go to like the Pound Swissy, and I go, I have bearish numbers, but that doesn't mean I'm going to take a sell trade. I have bearish numbers, and I look at the Pound Swissy, I say, okay, well, if the Pound Swissy gets up in this area here, maybe I will take a sell. But we're not there yet. This high right here, or this high, if it gets up into that area, that's where I would look for some weakness, a double top, a big shadow, kangaroo tail, something like that. And then I go to, is the pound bearish right now? It was earlier. Yeah, it still is, barely. Okay, so the pound, I would say, all right, what's the pound doing? If I look at the pound chart, I see that it's made a drop. So it dropped off of this trend line, okay? So it went down, it consolidated, went down. It made a little bit of a bearish flag, and it broke that. If I wanted to, actually, this is one of my favorite ways to trade. If I wanted to trade the pound right now, this is what I would do. I would wait for it to pull back. Now, whether it gets all the way up to the underside of this trend line or not doesn't really matter. But if it gives me, like, let's say next Monday, it starts marching higher, okay? Next week when the market opens, it starts marching higher. And then, right about here, it prints a trendy kangaroo tail, okay? I would be interested in selling that trendy kangaroo tail, sell stop below the low of that candle. If it gets triggered, I would sell it all the way down to here. And that's where I would take profit. Why do I love that? Because this low has already defined where our take profit should be. Because while it might break through there, and in fact I would probably expect it to if the numbers stayed bearish, what it may do is it may get stuck here and box up in a consolidation box, or bounce rather hard. And so I like to take profit right here because this is like a magnet that it's going to suck the market down here. So if we get a nice little retracement move and it goes into Monday, and then by, say, London session open on Monday, we get a nice reversal like a kangaroo tail, boy, that would be great to sell it all the way down here. Put my stop loss, on the other side of this trend line or on the other side of the kangaroo tail, depending on, how close it is to the trend line. And I could hold on to a little bit of the position and see if it can break through the floor and then ride that out with a trailing exit as well. The other thing I wanted to mention, the last thing I wanted to mention is that you are going to notice, if you pay attention to the open position ratios, you are going to notice that they ebb and flow. And they will ebb and flow with the ebbs and flows of the market. So in our last video, if you didn't see the last video on market rhythm, what you'll notice is if you put those two things together, the market rhythm from the last session and these open position ratios, what you will notice is that when the market, so there's the pound right there, the pound has dropped off. When the pound goes up, okay, so the pound is in a bearish trend, right? But when it starts to go up a bit like this, you'll see the numbers will fall away. They'll get closer to 50-50. And then when there's trending candles, big fat red candles that are coming down hard, you'll see the numbers get out of whack again. It'll go to like 72% long or whatever. So right now it's at 61% long. If it keeps going higher, you would expect that to drop and go to 58 or 57, whatever, something like that. And then as soon as you start to see the trend kick in again, this will go orange or red again. That is very typical. So it's almost, you can see the traders taking their profits or their smaller losses when the counter trend moves are initiated. So I would argue that we're probably due for a counter trend move here on the pound, and that will be reflected in the open position ratios. Does that make sense? Yeah, it's actually pretty cool when you kind of put it all together. Again, this is my approach. This may not be your approach. Perhaps you would prefer to use, like I said, I think the ADX is a pretty common indicator for trend. So this blue line is trend strength, and if the green is above the red, it's a bullish trend, and if the red is above the green, then it's a bearish trend. So in this period right here, we had a strong bearish trend, right? This is saying strong bearish trend. So in this period right here. And then in here it's saying strong bullish trend, right? Now I back this up and look at the big picture and say this is just a big pullback in the midst of a downtrend, right? A retracement move in the midst of a downtrend. In fact, how I was saying that we're due for like a retracement move here? This could end up being a head and shoulders. You can have a shoulder, head, and shoulder. Now normally you would look for those sort of up at the top of the market, not down at the bottom of a downward move. So that's not really ideal. Let me get rid of this. So normally a head and shoulders is like as the market tops out, like it was almost due for one here. It didn't give you a shoulder. It gave you a shoulder, head, and then you didn't get that last shoulder here. See? So yeah, so you can see the ebbs and flows of the market if you pay attention to the open position ratios. Yeah. Anything else? All right, guys. We will see you in the next session. Session number 3, we're going to talk about entries. We're going to talk about getting into the market. How do we define our entries? What do we look for in entries? What are they used for? What are some of the traps that traders fall into when it comes to entries? We'll see you then. Okay. Have a wonderful week and a great weekend, and we'll see you next week. Okay. See ya. Bye.